What's going on, everyone? And welcome back to another episode of WagMe TV. The boys are back, and we're going to pick up pretty much right where we left off last week, talking about all the things having to do with the FTX contagion and the impacts from this crazy debacle. If you want more backstory on FTX and what our thoughts are on it, definitely go check out a couple of our previous videos. But today we're going to be covering the latest domino to fall in this whole FTX debacle, and that is a company called Genesis. And we're going to be answering the billion-dollar question, which is, are we going to see a massive sell-off in Bitcoin in the near future? So, Mata, can you take us away?
Kind of where we left off last week is just talking about more of this FTX contagion, right? It's continued to spread. We talked about platforms like BlockFi, other organizations like exchanges like AAX, even VCs like Sino Global are expressing tons of issues, right? Either they're losing tons of money or that money's locked up on FTX, right? So as Soham alluded to, the next kind of shoe to drop here is Genesis, which is a crypto lending unit. And they actually reported that they'll be halting customer withdrawals. And so that pulls us into kind of this general timeline with regards to FTX.
So this was a story that started to develop right after the FTX collapse. And so we saw really in early November them saying that we have no exposure to FTX. We've got no funds locked on that platform. With them going back on that the next day and saying they only lost $7 million. Well, that doesn't seem like anything to be concerned about, except the next day they come back and say there's actually $175 million worth of funds locked on FTX. And so we know that's a pretty significant amount of money, and it's probably not their only loss on the balance sheet. It turns out they probably have some other exposure to previous drops in the crypto markets. And so as November goes on, they halt withdrawals. They say no new loans to customers. And then, they need $1 billion. This is a huge hold. This is something that obviously shows that they were exposed to maybe some other contagion that happened earlier this summer, whether it was Three Arrows Capital, whether it was other crypto hedge funds. And so now we find ourselves essentially where we're at, where they're insolvent and really looking to raise funds, looking for any help, and looking in their ecosystem of companies with DCG and Grayscale, their sister company.
Sounds like an all too familiar path that we've been on over the last couple of weeks, that we've been on over the course of the year. And I think really to get a whole perspective of this, we wanted to take us from a little bit higher level to kind of understand who all the players are and kind of the impacts that this could have. Starting with the topic right now, Genesis, who we've been chatting about briefly. And so what is Genesis, right? So Genesis, as you can see here, is a subsidiary of DCG, which is also known as Digital Currency Group. And Genesis was developed in 2015, 2016. It's the largest loan origination firm in the space. And they have tons of controlling interests in tons of businesses that are fundamental in crypto. So they've invested in most likely most of the projects and companies that we talk about and that we've all heard of.
Absolutely. And just to add on to that as well, what Genesis was really doing is they were the main pioneer in what's called prime brokerage, right? In traditional finance, what a prime broker does is they have some core functionalities. One would be that they custody assets, so they hold assets for their clients. Also, they provide over-the-counter trading services, so not necessarily trading services on a exchange, but OTC transactions, right? And then also, they are able to extend credit. They're able to extend loans, probably offer margin trading and derivatives products. So a lot of the, services that a prime broker is probably similar to what everyone experiences at a Fidelity and things like that. The main difference is here that they're really facing off against institutional clients for the most part, if not 100% of the time, right? So these could be large hedge funds. These could be sophisticated investors, large family offices, potentially sovereign wealth funds, things of that nature. And so they're really dealing with the biggest players, right? Some of examples in TradFi would be, a Citibank or a Goldman Sachs or, a Credit Suisse or someone like that would offer like prime brokerage services. Genesis was really, pioneering that path, and we're the market leaders in the crypto realm of prime brokerage, just so, everyone has a little bit of background.
Yeah, and like Mata said, Genesis is owned or a subsidiary of DCG, and as we talked about in the timeline, and we'll see as the story plays out, DCG and Genesis have some interesting relationships with the lending that goes on for some of the holes we see in Genesis's balance sheet. So like we talked about, there was a $175 million hole for funds locked on FTX, and then also the $1 billion hole that they're looking to raise funding now. DCG has tried to help with this in the past, and so this is really the problem in the story that we're talking about here is DCG finds himself in a bad spot for possibly lending and helping out Genesis too much, which could come to affect Genesis's sister company, Grayscale, which I think Mata can run us through and the products that they offer.
Yeah, absolutely. And so it just goes to show how all of these are even more intertwined than we ever could have thought. And even the ones that are intertwined with a parent company, right, they could have major effects on each other, right? So Grayscale, their biggest product is the Grayscale Bitcoin Trust, or what you might have heard called GBTC. And so that's a fund which investors buy shares in order to gain exposure to Bitcoin. Right. So it's been really good for institutional investors. It started back in 2013. It's essentially their way of investing in Bitcoin without necessarily buying true Bitcoin themselves. And so because of this trust, Grayscale is the single largest holder of Bitcoin other than Satoshi that we're aware of. And so obviously, as I've mentioned, right, there's some fears of spillover from this Genesis issue that we've been chatting about. So Grayscale has said that Genesis is not a counterparty or a service provider for any Grayscale product. The issue I think that's really come to light is, where does DCG play into this? So it's unclear whether DCG would have the free reserves to prop up Genesis, right? Given the size of Genesis balance sheet that we've talked about. Who really knows what the impact would be then on Grayscale if, say, Genesis would have to file for bankruptcy, right? So Grayscale has mentioned that it's safe, right? But again, we've heard that before. I think the biggest thing that we'll want to cover really quickly is that Grayscale will not release their proof of reserves, just something that we talked about a couple of weeks ago when all this FTX stuff blew up, right? Everyone's kind of rushing to release what their reserves are to give the market a little bit more confidence. Grayscale is refusing to do that. All they're saying is, your funds are safe, trust us, right? Given kind of the scenario we've all been in, I can kind of understand why people in the community in general maybe don't have all that sort of trust with them. So I think the biggest question that we're going to get into is, how does all of this business with DCG and with Genesis impact the possibility of GBTC being liquidated, whether that's from DCG themselves and unwinding that liquidity to try to pay for something like Genesis or try to fund themselves? And then on top of that, what would that cascade look like if that were to happen, right? And so I will actually pull this up because I think it's a very interesting view. And so do you want to go into this?
Yeah, absolutely. So what this chart is basically showing, a discount or premium to NAV, which is net asset value of the GBTC trust, right? And so as you can see, you rewind back to 2020 and 2021, GBTC was actually trading at a premium to NAV, which means that the market price of GBTC was actually higher than the amount of Bitcoin, the value of the Bitcoin actually backing it within the trust, right? And you see this kind of start to trickle off. And then just to highlight everything that Armada was talking about in terms of the distrust, right? Right now it's sitting at a, juicy 45% discount to NAV, meaning that the value of the GBTC trust is actually almost half of the value of the Bitcoin that's sitting within the trust. So that's basically it's compounding on the fact that, these guys aren't showing the proof of reserves. Obviously, the entire industry has lost a lot of confidence. And, that's basically what this is highlighting here, and potentially a lot more, potentially a lot more signaling in terms of, are they actually going to end up getting liquidated? What is the health of DCG, the parent company as a whole? All of these things start to kind of come into play here, and something that's absolutely being recognized by the market, as you can see in this chart.
And so a real quick sidebar here, Soham, do you think this is because investors believe that they've been selling Bitcoin to, deal with some of the losses on the balance sheet that they might have?
It's hard to say what is actually spurring this. What is clear is that holders of GBTC are willing to take a massively lower price, for a massively discounted price to get out of their GBTC position.
Right.
That the market participants are basically saying, okay, I know that the value of the Bitcoin within this trust is actually higher at face value, but I'm willing to take a massive discount to get out of this position. That's something that that stands out to me. But as mentioned, there's probably multiple things going on here in terms of people's thought processes on how this is kind of working, and what this implies for the future.
Right. And I think it's something where we've seen DCG come out and say they owe money to Genesis. Genesis owes a significant amount, or has outstanding loans that can't be accounted for. And I guess, Mata, do we have anything around details or what type of spillover could occur going forward?
Grayscale did come out and say, obviously, right, as I mentioned, they didn't give a proof of reserves, but essentially what they're saying is if Genesis is forced to file for bankruptcy, creditors will have no claim on GBTC assets, right? And so, again, this is all great, but it still would be nice to at least get that extra little assurance from something like a proof of reserve that was sent out, right? So right now, just like what it feels like happens all the time, is it's kind of just like a he said, she said sort of situation, where it's like, okay, who do we trust at this point? And I think, going back to the premium that GBTC was trading on and now the discount that it's trading on, again, it just reflects kind of the sentiment that's in the market right now. Nobody wants to trust these centralized organizations with anything that they have, whether that's their money, whether that's their Bitcoin. It's really, there's no trust out there, and people are, especially with this being a lot of people's only way to get direct exposure to Bitcoin. They're like, well, why am I even doing this if I'm not going to be able to redeem actual Bitcoin with this in the end? So, it's a really tough situation, and how this is all set up. And I think, this could go back much further than this FTX Contagion. I think this FTX Contagion piece and Genesis kind of starting to show a couple scars, and DCG kind of having to step in once again is kind of just that icing on the cake, if you will, for this sort of situation. So it could have been something that's been going on for a while, where this FTX Contagion, everything that happened there, kind of brought it all to the surface.
Yeah, and I think it, like you're saying, it could have been back to Three Arrows Capital. They had exposure there. And it really happened when, like we always say, don't fight the Fed. Federal Reserve raised rates. And because of this, we saw a lot of big players in the space have bad loans or bad exposure to bad assets. And with no proof of reserve, it's really difficult as, an investor in the space or somebody that wants to be able to learn more and invest and find projects to see who you can trust and who you can't trust. And I know I said it about 5 times on the last video, but it's just another reason to keep your funds safe, not your keys, not your crypto, because it's stuff like this where, you just can't trust the people that you're giving your money. And it's even tougher too, because this is really an entry point for institutional investors. Something that we've talked about in the last year, how these are people we want in the space. We want to bring safe money. We want to bring stable money into these investments. And so, definitely not a good look. And it's something where, we need a good ending out of this or things could get bad.
Absolutely.
Something to be noted as well, right, is everyone's been calling for a spot Bitcoin ETF for the longest time. Grayscale was with this GBTC piece. They were trying to get that approved from the SEC. They're actually right now in the process of suing the SEC for not allowing the trust to become a spot Bitcoin ETF. So if anything goes wrong here, that's going to push us back even further with something like that. That'll make that even less likely, and it surely won't be someone like Grayscale that'll be doing that. So,
and this wouldn't have happened with an ETF, right?
It's a good question. No, I mean it's very clear that this is just a brutal situation. And what's important to note, I think, is like they can say whatever they want. At the end of the day, like even if they don't want to liquidate the trust, they might have to liquidate the trust. That's the whole thing of like forced selling, right? If that is their most economical option, right? They're going and they're looking for people to lend them money, get them out of this deep hole that they're in, all this stuff. Let's say nobody comes. Let's say that liquidating the trust is inherently the best move. Because right now, like, who's going to come and lend them money, or like, who's going to come cut a deal with them? Probably somebody who's going to like lowball the absolute hell out of them, right? And so it could make economical sense to actually liquidate the funds within the trust. Now, that's not something that they want to do, but it could be. That's the whole thing about forced selling, right? It could be forced. So I don't know. For me, two things to keep an eye on. One, we'll have all the updates on this moving forward, but definitely keep a sharp eye out. Be searching on Twitter and stuff. That's probably the best place to get the news on all this stuff that's breaking. Keep your pulse on the Genesis situation. We'll have updates moving forward, and then other contagion effects from this. We already saw just this week, right? Gemini Earn, their product is linked to Genesis, right? And so they've paused all withdrawals and everything from Gemini Earn, right? Are there other, companies that have some exposure here? Everything that, that for me is the two things to keep an eye on.
Yeah. Make sure you're practicing self-custody when you can. Stay as safe as you can out there. And I think you make a great point about keeping up to date on all this, right? Where there's smoke, there's often fire. So I assume this story will continue to unravel right in front of our eyes. So definitely keep an eye on it. And again, keep all your funds safe if you can.
Yes, sir. Stay safe out there, fam. And, as always, if you find any of this helpful, useful in any way, shape, or form, make sure to hit the like button, subscribe down below, and leave us some comments. We got some good comments on the last couple episodes. So we love to hear from you guys, the viewers. And so, stay safe out there. And till next time, wag me.